Let's say you bought a $50 million policy, the interest on the premium and the interest in that case, when you passed away was 12 million. The bank would take their 12 million. They're happy because they got their interest. Your family would receive 38 million.
What is premium financing and what's the best, kept secret when it comes to premium financing?
Okay, so premium financing is when you finance a life insurance policy. Instead of paying with your own money, you pay for the life insurance policy using the bank's money. Now, why is that great? Why is that awesome? Well, look at it this way. What do we actually pay cash for nowadays? Right? In most cases, we're paying, you buy a house. When was the last time you heard of anyone buying a house all cash? Unless they're about to refi it 20 minutes later. Or a couple of days later. Commercial properties. I don't think I've heard of anyone buying a commercial property in cash in the last 15 years, right? Cars, right? We finance our cars. We finance our motorcycles, our yachts, and so on and so forth. So premium financing is buying, let's say, it was developed originally for buying a $25 or $50 million death benefit or a life insurance policy using as little money as possible. Right, with just using the bank's money. Now, in the simplest concept, what would happen is you would borrow money from the bank. You would buy this life insurance policy. When you pass away, the bank would get the money that they loaned you plus interest, and it would come out of the death benefit. Right. So let's say you bought a $50 million policy. The interest on the premium and the interest in that case, when you passed away was 12 million. The bank would take their 12 million. They're happy because they got their interest. Your family would receive 38 million.
Perfect. Got it. Yeah. So you're able to finance what you would have bought anyways, but instead of buying with cash, you use the bank's money to finance it and get a bigger payout. And the bank gets paid when you die with the interest and whatever the amount that was, and your family gets the other benefit. Is that a fair summary?
Yes. Right.
Excellent.
And one benefit of life insurance is that it's income tax free. So the death benefit is 100% income tax free. Estate tax. Most of the time, people who need these type of policies do this for estate tax purposes. So I think you can correct me if I'm wrong, but the estate tax exclusion is around 13 million
per person per year right now. Yeah. And then it's set to probably cut to about 5 million that we've heard in 2026 per person. So a married couple will be about 10 million in 2026, single about 5, but we'll see where those numbers actually shake out. But right now it's at the highest it's been in a long time, which is about 13 per person.
And I do think that they're going to go down. We're always saying that taxes are going to go, with the current U.S. debt, what's going on, taxes are going to go up. What most people don't realize actually is taxes have been increasing. They just might not be income tax. During the CARES Act, one thing that changed, and this is completely unrelated, but a lot of people don't realize is a lot of people who had money in IRAs, if you passed away before you took all the money out, that IRA or 401k is now an inherited IRA. Pre the CARES Act, that IRA would just transfer. If I inherited an IRA from my dad, that IRA would just transfer over into my IRA. I could just do a direct rollover. I could just move the money into my own retirement plan. Nowadays, what's happened is you have 10 years to take that money out and pay all the income taxes that weren't paid on that money that's in that IRA and in that 401k. It was something slipped in to increase taxes. And what most people don't realize is taxes are going up, but it's the taxes that don't affect most people. Like what percent of the population does that affect at a certain time? Maybe 0.5% of people who are inheriting IRAs from their parents, or 0.5% of people are affected by that, right? Now think about what percentage of people will this estate tax exclusion actually affect, right? How many people are actually going to inherit more than 5 or 13 million? Now, if you're in California, you buy a shack of a house, it's 1.2. I'm in the market looking for something and constantly disappointed, but yeah. So
yeah, that's a great point. I mean, that's actually a good thing to think about, right? Looking at tax flow, not just cash flow, and understanding that if you're getting an IRA from your mom or your dad, and it's 10 million bucks, let's just say, right? Guess what? You need to take $1 million basically a year over that 10 years. I don't know if it's divided equally, right? But you're going to pay taxes on that million. It's going to be ordinary income tax, which is the highest tax rate. Am I hearing that right, John, on that IRA piece?
Yes, it is.